What is going on, ladies and gentlemen? Today we are going to teach you guys how to sell options. Now, I've already got a video on how to buy options, so if you don't know how to do that already, go check that video out. But this video is going to be strictly how to sell options. So why would you want to sell an option? So for example, we've got this AT&T put right here that I bought this morning at $14. Now, if I didn't think AT&T was going to go down any further than it was, I bought it probably at around, I would say 38.34, and it dropped to 38.08. So the contract has gone up quite a bit since I bought it because the stock has moved down because I bought a put. So if I wanted to sell this, I would be able to make $8 in a day, which is pretty decent. But I really don't want to sell AT&T right now because the stock just had its ex-dividend day. It has a lot more room to go down. So instead of actually selling out and making this $8, I'm going to continue to hold on to it and let the value increase, and then I'll sell it. So in order to sell an option, all you have to do is search the stock and you go to trade options and you click sell, and you find whatever strike price you have. But I've got puts, so I've got this 38 put. I'd click on it, continue, and then this is going to close me out of the contract. I only have one contract, so I'd put 1, put the limit order in. I would probably put it at 21, so I'd get filled instantly. People will probably buy it immediately at 21, and then boom, you'd get a minimum credit of $21. You would go back out here, and this would be gone. You would have no more AT&T put options because you just sold out of them for $8 profit. But I'm gonna hold that on here because I believe that AT&T can go down further. There's a couple other advanced strategies on why you would want to sell calls and puts. Say you bought 100 shares of Ford, for example. You bought 100 shares of Ford at $9.23. What you would be able to do with those 100 shares is you would actually be able to sell calls at later dates and collect premium. So we could go to, let's say, February 21st. If we didn't think Ford was going to go higher than $10 or $11, whatever, we could sell either of these and collect, we could collect $6 on this one. We could collect $2 on this one. And Ford doesn't move that much, so it would be very likely that we'd be able to collect this $6 and not have to sell our contracts, because when you're selling a call, you're actually saying that if this $10 contract goes in the money, so if Ford shares goes above $10, that you will sell your 100 shares for the whatever price your contract is worth. So in this case, $10 is the strike price. So say Ford went to $11, someone in the market would be able to assign your call that you sold, and you would have to sell your 100 shares of Ford to them at $10, but the stock is trading at $11. So I hope that kind of makes sense. That's a little more of an advanced strategy, but I just want to put out what you guys are able to do with selling calls and puts. So if you watched the how to buy options video, you know that calls and puts are the exact opposite. So when you're selling a put, you're essentially saying that you're going to buy the share at this price if it goes lower than whatever your contract is. So say we bought this $9 contract and we collected the $29 in premium. If Ford went below $9 by February 21st and someone assigned this contract, we'd have to buy the shares at $9 even though it's selling, down here at $8 or wherever it's selling. But you don't have to have 100 shares to sell puts. You just have to have the cash available. So in order to buy this contract right here, this $9 contract, you would have to have $900 of buying power in your account. Because if that happens and you do get assigned on this, you're going to have to buy the 100 shares of Ford. But say you wanted to buy the 100 shares of Ford at $9 anyway, that could be advantageous for you because you collected $29 in premium and you got the share at the price you wanted, even if it is selling lower. Maybe you made more money because of the premium, because Ford doesn't move that much. And you can do this with any stock. I recommend doing it on Ford, Snapchat, Bank of America, anything that doesn't move that much, so you have minimal risk when you're trying to collect that premium selling option. Again, I know that last part probably didn't make too much sense. That's a really advanced strategy, but we'll go more in depth into that on a different video in the future if you guys need it. Or you could come in the live streams. We're live Monday through Friday, market open to market close. So be sure to come on the live streams on the Options Trading Live channel or the Trading Fraternity channel. We got your back. We'll teach you how to trade options and get your long-term going. Just build a better future for yourself, and life will be good. You just got to take it slow. Don't do anything too risky, you know. Paper trade, always paper trade. If you don't know what you're doing, don't put your real money into the stock market. Just paper trade and get familiar, and then you can start putting little amounts in at a time. So I hope you guys enjoyed this video. If you have any questions, leave them in the comments below. Come to the live streams, and I'll see you guys in the next video. Peace out.